Inflation. How burning money can make you rich. Ever wondered how money that's burning away with inflation could actually be your ticket to riches? Today, we're going to look at how the release of the Consumer Price Index affects the financial markets and why this information is a goldmine for investors. Get ready to be armed with knowledge and insight to help you navigate the dynamic world of economics. Let's start with the basics. CPI, or the Consumer Price Index, measures changes in the price level of a wide group of goods and services over a period. So it reflects changes in the cost of living in a country by measuring the purchasing power. CPI growth means that a typical basket of goods has become more expensive compared with the base period. An acceleration in CPI growth signals that inflation is increasing. This is the data that economists, analysts, and of course, investors keep their eyes on. The publication of the CPI index is very important for financial markets. Why is that? The answer is simple. This index determines the direction of monetary policy. The central bank looks not only at actual inflation figures, but also at inflation expectations. If consumer prices are expected to accelerate, workers will start demanding higher wages, and companies will start raising prices. All this can lead to even higher inflation. On the other hand, lower CPI readings or slower inflation signals falling demand. These risks are associated not only with inflation but also with deflation. Deflation can cause consumers and companies to postpone purchases and investments, which slows economic growth. This is why central banks cut interest rates or even engage in quantitative easing, for example, printing new money to stimulate the economy by making money and credit more readily available. Investors pay particular attention to the so-called core CPI. It excludes food and energy, whose prices can fluctuate wildly, giving a more stable picture of underlying price changes. However, it is worth remembering that even the excluded components account for around a quarter of the total basket and have a significant impact on the economy and consumer sentiment. Now, the most interesting thing is how burning money can make you rich. Imagine that the money you hold in cash is slowly burning up due to inflation. If you don't invest, your savings lose purchasing power, like banknotes burning in the flames of inflation. But if you can catch the moment and know how the market reacts to CPI, and how it will affect central bank policy, you have a chance to buy assets before markets fully price in these changes in circumstance. Imagine the following. The release of a higher than expected CPI is a signal for the market. A higher pressure on equity prices tends to follow, while bonds and the exchange rate often rise. A wise investor who understands the logic of what is happening can move his money into more promising assets. Alternatively, the situation can be reversed. CPI comes in lower than forecast, leading the central bank to soften its rhetoric or move to support the economy. Assets, especially in the consumer goods sector, could soar. At the same time, local currency and bond prices often fall under pressure. In major developed economies, market participants and investment banks forecast key macroeconomic indicators, including inflation, before their official release. The market reacts to the difference between expectations and actual figures. Surveys of consumers' inflation expectations should be given special mention. Sometimes, the actual figures are within the norm, but a sharp change in inflation expectations, what people expect inflation to be like in 1, 2, or 5 years, can have a visible impact on the central bank's policy. So, the markets can react accordingly. Are you ready to spot these signals? Because that is where the profit potential lies. In this game, learning economic indicators becomes a superpower, allowing you to outperform. In this way, burning money that depreciates with every day you wait, can be transformed into investment potential and ultimately grow your capital. You need to learn how to read these signals. Follow CPI releases, study core CPI trends, and analyze inflation expectations and forecasts. Use economic data as a map to navigate the turbulent ocean of financial markets. That's how the money burning from the inflationary fire can be the fuel for your financial takeoff. In conclusion, the publication of the CPI is more than just a dry statistic. It is an indicator that can determine the direction of the economy, a signal to the central bank, and, as a result, a major factor in the movement of the financial markets. By understanding when money is burning due to inflation, you'll be able to rewire those flames into fuel to grow your capital. If you want to be an investor who is always one step ahead, study the CPI, follow macroeconomic trends, and use them in your investment decisions. True success comes to those who can read the economic landscape and turn challenges into opportunities. Thank you for joining us. Subscribe to the channel so you don't miss new videos on turning economic knowledge into real money. In the meantime, remember that burning money can be the source of your wealth if you learn to time it right.